Hey everyone, Vaz here, and more importantly, we have a friend from the past, Douglas Borthwick. You guys probably remember him for being a Forex genius, but now he's made a move into crypto and he's the CMO for INX. Doug, thanks for joining me today.
Hey, thanks for having me. It's great to be here.
Well, it's definitely great to be here because it seems like you went rogue here, Doug. I mean, you made a move from a Forex trader to now in crypto. What happened? What gives?
You know, I spent a 25-year career looking around the world and finding weakness in currencies. And that happened first in Asia during the Asia disasters of Malaysia, Thailand, Indonesia. Then we moved on to Latin America, divided currencies there. Then we divide currency in Iceland. But after a while, you know, we always referred to currencies as being dirty shirts. And the dollar is always the cleanest of the dirty shirts. And I think I woke up at some time around 2008 and realized that the US wasn't the least dirty shirt. It was actually filthy as well. And the only way to sort of devalue the dollar isn't by buying other currencies. It was by buying a fixed asset and something that I guess was the truest, I guess what you'd call real money or hardest asset. And I didn't come up with it. You know, there was a chap called Satoshi that came up with this, that with Bitcoin. And it was, you know, this currency that was fixed in nature, but at the same time could easily be transferred from one person to another. And I was enamored by it in 2008 and then I realized that, you know, Congress, instead of working for the people or with the Fed, in the old days, if there's something bad that was happening in the economy, you'd raise money by raising taxes. And Congress wasn't willing to raise taxes. And so it was up to the Fed to create money out of thin air. And that money printing made me think, well, maybe the dollar isn't quite as strong as it you know leads itself to be. COVID has obviously thrown that, you know, into oblivion in terms of, you know, monetary keeping together. And so we're at this point now where there's more dollars printed in the last 3 months than in the last couple of years. And so if you want to have a hard asset, it has to be in the crypto universe. Bitcoin obviously is one of the strongest ones. So I got into crypto because I wanted to devalue the dollar, but the only way I could do it was by not against with another currency, but actually using cryptography. And so cryptocurrencies for me have become sort of that way of looking at it. And people look at Bitcoin and say, wow, it's going up so high, it's really moving high. And what I like to say is it's not that Bitcoin's moving up in price, it's that the dollar is weakening considerably.
Doug, am I hearing you right? You're saying that the dollar is dirtier than crypto, which has been, you know, talked about being riddled with, you know, terrorist attacks and things like that. Yeah. Am I hearing you right?
You're hearing me right in that crypto for sure in the early days was looked at as being the domain for drug dealers. And, you know, you'd go on the Silk Road and you buy illicit merchandise and you'd pass it back and forth. And so you didn't have, you know, your fingers on it, you'd use crypto to pay for it. But things have moved along quite quickly in the last 5 years. You now find regulation behind this. There's KYC, AML. There's companies like Chainalysis that actually can see who owns crypto and where they live. And, you know, the last guy to be buying it and talking about it was MassMutual, an insurance company. It's probably your grandparents' insurance company. When they're buying crypto, it's no longer the drug dealers. Now it's mainstream.
I mean, you're right. You have tons of companies that are putting so much money towards crypto desks, including, you know, Goldman Sachs and companies like that. So let's talk about Bitcoin, crypto, security tokens. What can you tell us about it today that you learned?
Well, cryptocurrency it's traded like currencies. You need something called an MT license, and you can trade it in any state in the US as long as you have an MT license there. Security tokens are something completely new. They've been around for 3 or 4 years. And we looked at them in 2017 and we thought, look, a digital security is cool because it trades 24 hours a day, 7 days a week. The problem, though, was that it was only allowed to be traded by rich people. The SEC calls that accredited investors. Now, if you have an issue that you're listing on an exchange, but only 1,000 people can trade it, maybe 20 people log in every day to trade it, there's no liquidity. It's a disaster. It's a sleepy backwater. We went to the SEC in 2017 and we said, listen, security tokens are going to be big, but only if retail can trade them and if there's no lockup periods. And the SEC said, well, good luck with that, but you can try to create that security. We spent 950 days. That's probably why you haven't heard from me for a while. 950 days with the SEC creating the first ever digital security called a security token that is SEC registered. It's so, we're registered in the same way as Amazon is or Nike. We could be listed on a national exchange if they were able to list digital securities. We created this to raise money for our own company, which has two things. One, a cryptocurrency trading business. And the second one is a business for the trading of digital securities. And the nice thing with our digital security is retail can buy it immediately. There's no lockup here. You don't have to be very wealthy. There's a minimum of like $1,000 to buy into it, but you're buying in on the ground floor. And traditionally, when a company wanted to raise money, you do a friends and family, and then you'd raise money in a series A, B, C, D, lots of different series of rounds where you raise money from private equity guys and venture capital guys. We said, you know what, that's a nice system, but why can't everyone get in on the ground floor? Why can't the retail investor, if they think this is a good idea, a great view, it's going to be a really important business, why can't they invest today as opposed to in 4 years' time when the valuation's 10 billion? So if you look at something like Coinbase, the first time that the retail investor can get involved is going to be at their IPO, where some folks are saying it's going to be a $28 billion IPO. But the earliest VC guys were probably getting in when it was a $5 million company. And what we've done is we've democratized investment, and we've said, look, if you believe that we're going to be the next Coinbase or we're going to be the next NASDAQ, why don't you invest today, get the same valuation ability and be able to buy in at zero or next or close to zero in terms of the valuation. And then as we grow, and cryptocurrency exchanges are the fastest growing businesses right now in this crypto universe. As we grow, the early investors will grow too. And so that's what we wanted to do, is create something that everybody can partake in and be part of the crypto revolution.
And well, that sounds awesome. Why move forward to help someone like, the retail people like me get on board?
Why do that? Well,
yeah, everything's okay the way it is right now, isn't it?
Not really. So if you think about it, you can invest right now in, let's say, Coinbase when they go public. You're a retail person, you can invest in them. That's great. But you're buying in when it's worth $28 billion. Don't you wish you're one of those first people that could have bought it when they were just a small idea, or when they had the technology but they hadn't gone live yet? Probably, because you own a much larger cut of it. Your $1,000 that you'd buy of Coinbase today would maybe buy 50 times your percentage in terms of buying into INX today. And yet Coinbase is maybe only 3 years old in the business that they have. Binance is another company in the crypto business. They did a $15 million ICO 3 years ago. The market cap for that today is around $6 billion. So if you can get in early on these crypto investments, you can do very well. Now, certainly there's lots of risks. We have a prospectus that people should take a look at. It's about 300 pages long. About 295 of those pages are the risks involved in crypto.
So INX, it helps people trade, retail traders, or it broadens the community to trade Bitcoin and these digital securities on this unique platform. That's
right. Well, our thought is, if you want to get digital securities to start trading, you have to give them an audience. The audience can't be 1,000 rich people. It's got to be millions of retail investors. And so by doing the crypto business, we can attract millions of people to our platform to trade crypto. They can click on a tab and then see security tokens. Much in the same way as when you go onto E-Trade and you trade currencies, you say, oh, maybe I'll trade some equities, maybe I'll trade some fixed income, maybe I'll trade this or that. You just click on different tabs. It makes it easier. So if we can bring the audience to the product, we believe that that product is going to be a lot more, is going to be traded much more, and the liquidity will be much higher. Nike would never create a digital token or digital security of itself if only 1,000 people could trade it. But if 20 million or 300 million could trade it, for sure they would. And that's our plan. Now, the SEC chairman said about 4 weeks ago, he sees all assets moving onto the blockchain. So all equities will start trading digitally. And that means you could trade Nike 24/7. That's pretty exciting. If you're a Robinhood trader, I'm sure you probably have a Robinhood account, Boz, and you sit there and you buy your stocks all day long, and then you wonder, why is it closed? I was just about to buy more, And it's closed. It's closed because the stock market closes. If these were digital securities, you'd be trading all night. You've been on the floor of the New York Stock Exchange. I've seen your face down there many times. It's a sound studio for CNBC and Modern Wall Street. That's all it is these days. And we know from COVID that computers are doing the trading all day. The computer doesn't have to go home at 4 o'clock to take a nap. And it doesn't have to come in later on, like in the morning at 9:30, because it's been reading the newspaper. The way that equity markets are set up is from the 1930s or the 20s, where people had a morning newspaper. They read that, and then they started trading around 9:30. And then around 4 o'clock, they'd leave because they wanted to commute back to New Jersey and read the evening newspaper. But you and I both know that this Amazon generation millennials, they're reading the news all day long, constantly on Twitter or on elsewhere, on Parler, wherever. But they're constantly getting their news, and they're wondering why our stock market's closed. So that's the millennial. They're going to start demanding Nike trades 24 hours. But what about the guys in, let's say, the emerging markets? The average guy in the third world can't afford to buy one US stock. Maybe it's $14 to buy the average stock, something like that. They can't afford that. That's a month's pay. But fractionalized ownership means that they could get some ownership of an Amazon share or whatever share in the US, and they could start having a small portfolio that could also help them build a retirement fund. Why is retirement based on equity appreciation only for the first world? It should be for everyone. There's a democratization when it comes down to 24 hours trading, 7 days a week digital assets. Now, for the issuer, it's even better, because the issuer can now trade on multiple exchanges around the world, and it just takes lines of code instead of lines of lawyers. And so Nike could be trading in New York, in London, in Seoul, in Singapore, in Tokyo, 24 hours a day, 7 days a week, constantly, which means that they're actually now seeing whole new different folks that want to invest in them. And so digital opens up so many things, but to the regulators, and these are the guys that matter, digital is probably the most important thing that they see. And that's because of something that we designed in our IPO in order to become the first digital asset. And that was something called a smart contract. And the smart contract ensures KYC AML, or know your customer anti-money laundering. Let's say, Voz, that you've got 500 shares of Nike and you give them over to James Sweeney. And James now has them and he sells them and he gets the cash. That's money laundering. But Nike doesn't know, the government didn't know, and James now has the money. And so that's a big flaw when it comes to current equities. With a digital security, you have to get your wallet that you're holding my security in, you have to get that on a whitelist. So I have to do a KYC, AML, and VOZ to make sure that you're a good person, you're not on a government blacklist. I then deposit my securities there. If you try to take your securities and move them over to James's wallet, it's going to say, no, I'm sorry, we don't know who this James is. He hasn't gone through KYC. So James then has to come in and do a KYC and register his wallet. And then the tokens can only move from one person's wallet to the other if the person is on a whitelist on this KYC AML.
Wow, well, it's so interesting that this blockchain has kind of evaporated any cracks in the system moving forward.
Absolutely, it takes away cracks in the system. And let's say James now gets in trouble with the Russian government. Or let's say, Voz, that you're a spy for Ukraine. Or whatever it is, the government could subpoena me and say, you know what, freeze the assets in her wallet. And I can do that, but they can't do that with Nike stock today. And so, you know, digital securities offer regulators so much more control over KYC, AML, and knowing who owns what. Now, for the issuer as well, I know because it's in your wallet, I can pay you a dividend directly into your wallet in Ethereum or in US dollars, which again is great because it means I don't have to pay all these middlemen. Normally, if a corporation pays $100 in dividends, maybe $97 gets in your pocket. The rest goes to the banks and the transfer agents and all these other people that are standing in the middle. A whole lot of efficiency. And you know as well as I do that Americans love anything that takes away friction. And that's one thing that we've done here is with digital securities, we take away so much friction from the workforce that and add in efficiency that it becomes an incredible tool for everyone.
Especially doxing me as a Russian spy. Sorry, guys.
Well, now everyone knows.
I'm going to have to go. Hey, Doug, you know, this is really cool. I heard that you mentioned something about an IPO. Are you in the process right now?
We are, yes. So we're doing it. It's the first ever IPO in the blockchain. And it's something that we're selling security. We're selling securities in our platform that allow a number of things. They're called securities because they pay out to the holder 40% of our profits. I think the legal term is net operating cash flow. 40% of our profits forever. Now, we can't make that 30 or 20 or 10 because we've had a tough year. It's always going to be 40%. Mm-hmm. But on top of that, we also can't print more tokens. So we're selling 130 million tokens. We can't decide like Tesla does when the price goes up, oh, let's just issue more tokens on that 40%. It's always going to be this limited number of tokens.
Interesting.
And at the same time, these number of tokens that are out in the market are going to start decreasing over time because people can also use these tokens as a utility. They can use them to pay their exchange fees. And if you use my tokens to pay the exchange fees, you get a discount, 10, 20%. So everyone's always going to want to use the tokens to pay the exchange fees. When they do that, the exchange fees move away from the public. They come to me, which means there's fewer tokens getting that 40%, which hopefully is going up.
Well, dang, how do I buy your tokens? I got to get going.
Well, look, first you need to read about the risks in the prospectus, but you can find everything at token.inx.co. And if you go there, you can read all about us, our vision, our story, everything we're doing. Since we've started this IPO, and it's an ongoing thing, it's probably going to end soon. But since we've started it, we've executed a number of things. We bought Open Finance, a broker-dealer ATS, to make sure that we can have the security token offering. It's one of only a handful that lets you list digital securities. We've also said that, I think by March, we'll be open with our cryptocurrency trading platform. And so there's a lot of things that we've already started moving on. We've got the action on. We've already started executing. And we want the public to be involved with us because we think it's very exciting. But at the same time, no one's ever had this chance before to be part of a crypto exchange from the ground floor, unless you're rich. And we said, you know what, it's for everyone.
It is revolutionary. I mean, it's like almost like you're starting a new asset class yourself right now.
The SEC terms it a new asset class, so I'm glad you said that. So yes, there's equities, there's debt, and now there's digital securities, of which INX was the inventor of that third one.
Well, it's definitely nice to have the SEC on your side, especially moving into this brand new space, Doug. I mean, this is so exciting. I could see why everyone would go digital now.
It's like digital is very exciting for the regulators, for the issuers, and for the retail investor and the millennials. I've got an 18-year-old son that spent an hour the other day talking to me about hundreds of different shares, and I was surprised he had them all in his portfolio. And I said, "How do you own them? How much money do you have?" He said he had $28, but it was fractional ownership on Robinhood. And that tells me we're onto a winner here because, look, these kids are into fractional ownership. They get annoyed when the market's closed. They laugh at me when I get bad news on a Friday from a press release. And I say, don't worry, I'll get out of it Monday at 9:30. They laugh at me and say, what are you talking about? You got to wait that long. Why isn't it open? And that's the generation that's about to inherit more wealth than any other generation from the baby boomers. It's the hugest wealth transfer in history, and it's going into the hands of young folk that want to trade 24 hours a day, 7 days a week.
And Doug, I mean, to your point, I mean, I see guys on Twitter all the time, guys and gals that have been trading for years that have been asking for fractionalized trading as well, fractionalizing stocks. So they're going to probably be pretty pumped about it too.
I think so too. Look, we're trying to do everything for everyone.
Well, we really appreciate it. Sir, how can we follow your new journey?
You can go to @INX Limited on Twitter. You could follow @DC Borthwick, or you could even go to YouTube and take a look at our videos. If you want to learn more about security tokens, just look up INX Limited on YouTube. We've got 5 videos there, very informative. Or if you want to invest, go to token.inx.co. Thank you.
We will definitely be checking that out. Definitely check out Doug's Twitter. He always posts some interesting, mind-blowing stuff as well from time to time. Thank you so much for joining me. It's so nice to see a glowing face during these times and some really good news, Doug.
Thank you very much. Great to see you.
Awesome. You too.